Good evening, Theo Trade. This is Corey Rosenblum bringing you your Theo Night video for August 2nd, 2018, and we're talking support. Really a big support bounce on technology. And we're going to look at major names, XLK, our technology ETF. We're looking now at the NASDAQ with a Pac-Man day. What's a Pac-Man day? A Pac-Man day is just when the market eats up or swallows or engulfs, even called a bullish engulfing, the prior session's low and high. We started with a trick trap trade today, because the market gapped down, this is the NASDAQ again, to 7220, and then we thought the market might have gone trend down, but instead this high volume, big bullish volume on the way up took us toward then above 7,300, and once the market broke through 7,300, it was all over for the bears, at least for today's session. Let's step the perspective up from the intraday chart to our daily chart, and we'll take a look at the XLK, our broader technology ETF. We did have a support play. So we're discussing this a little bit with respect to 70 and 50 cents was a key short-term pivot play on a swing basis for the XLK technology. We'll also talk about Apple's earnings in a moment, but for now, we had reversal candles. We had a support bounce. We had a support pivot through this zone. So today's bullish gap trap and go was in the context of this daily chart support level, just above 70 per share. Taking a look at individual components. Now that we're through most of the earnings, Microsoft had its bull bounce play just recently. Today even triggered it with a reversal candle touch into the 20 period exponential. The general rule that we talk about with trending markets and trending stocks is that we like to buy pullbacks. Pullbacks are retracements to rising trend lines or rising moving averages. That gets us a spot to put risk, to put stops, and a good spot to enter at inflection points. Microsoft is no different. It was a little, again, trick-a-trappy with a break under this, but that bear trap tricked the sellers and then initiated a short squeeze, giving us a buy opportunity on the way up. So Microsoft is holding support, and we'll see that most of these technology giants are doing the same. So we're looking for key reversal candles into key support levels, and that gives us a pivot point to play intraday trades on the way up or swing trades to the prior high or even above that. Big exception in the technology world has been Facebook. Facebook was a high flyer, 220 per share, this impossible rally that resulted in just about the inevitable fall. Reference January into February 2018 for the broader market. We did have a gap down on earnings to the 170 pivot. These are levels established from earlier in 2018, and this lower support has held. Yes, that is a dramatic gap. That is a painful gap for those who weren't hedged or playing options. But the next basis of support is 170 per share for Facebook. So reference these trend lines, these pivots, 175 and just above 182 for any short-term or intraday trades on the bounce. Next up is Amazon. Amazon had its earnings pulled back into its support level. Again, trick-a-trap. Again, trick-a-trap is when the market hits a support level, dips a little bit beneath it, and then surges up away from it. So that buy play was just above 1760 per share, and it is back inside its range, potentially heading up to 1880 or 1900 to keep this broader picture uptrend in line. Again, if you're swing trading or selling premium or doing other option strategies, it's ideal to try to engage positions on pullbacks, not on breakouts necessarily, but pullbacks, and manage the risk as the market trades higher. And the alternate or unexpected stop loss outcome would be a break under these support levels, and particularly the 50-day moving average. Apple surged through the expected earnings play. It was about a $9 move from the 191 level to about 200. But not only did that occur, but it blew straight through. So Apple now trades at 208 per share to keep these uptrend plays in motion. Probably surprising a lot of traders. And today, just becoming the first $1 trillion company in the S&P. So that's a milestone made for Apple. just on the back of Facebook making a little less stellar milestone, being the single largest financial stock loss in a trading session. Granted, Facebook was high priced and fell 19% in a single session. But at the moment, it's bouncing. Just like Netflix, which surprised on earnings to the downside, pivoted up and then played back into our support level. So that's the pivot point for Netflix on a bounce, maybe up to 360. But if this ever dips beneath 330 per share, look for a continued sell swing toward 300. And that's why we like pivot plays. It's not prediction so much, but it's putting on positions with a relatively tight stop at an inflection point or as close to it as we can get. Next up is Google. It also had a bullish earnings expectation bounce, but then fell right back to our breakout pivot support. It can be a good idea to trade breakouts on the first pullback as opposed to engaging straight off a breakout endeavor. And this pulled back to $12.20 per share, and today has bounced up off it again. It is the 20-day moving average, and it also is our July prior swing high. So Google has its pivot at $12.20 per share. Cisco is a little bit different because it is forming a triangle, a sideways range pattern. It's in the middle. It is pivoting up off of support, roughly $41.20 per share. But I think more importantly, the 200-day simple moving average. That is today's low near $41.20. So that's the key pivot spot. If you're not trading back and forth, fade or range tactics on a swing basis, or trading intraday off the support and short off the high, wait to establish your next swing position on a breakout above $43.50 per share. That takes us to the high 46, or ultimately beneath 41. And that could take us down to $37.50. Again, we like breakout plays because they play into range expansion from what we're seeing now, which is range contraction. Next up is IBM, which is also a tech stock not at the prior highs and not necessarily at a support pivot, but we are watching 140 per share and then 150 as resistance. Like Cisco, wait for a range breakout above 152 or beneath 137 to engage any longer-term swing trade, but until then, we try to play pivots back and forth. Finally, NVIDIA, strong stock, but not necessarily a clear support level. We're looking at price basis. We're beneath or chopping through moving averages. And this is in a trading range. That's roughly 240 per share to just above 265. So not a whole lot to do unless we get under its moving average 230 per share, and that triggers an aggressive short sell. Otherwise, this has a top of the range, just about 265. And that's going to be our plays. We'll take it back to the broader XLF. In these individual components, they make up the index. So you can trade those on an option play, premium sell, and otherwise swing trade. But this is the bigger picture of what the NASDAQ in aggregate and the XLK technology sector is doing. At the moment, the trend remains up. The moving averages are up. Sequence of higher highs, higher lows, and currently bouncing off key support levels. This is Corey Rosenblum for the Theo Trade Night video for August 2nd, 2018.